Now, sources of government revenue. That's the new topic we are meant to look at today. Sources of government revenue. We have an idea of what government is all about, and we also need to look at it. What do we mean by revenue? Government revenue refers to the income generated by the government through the citizen or the public, either through firm or individual. As we all know, government is divided into three. We have the federal, we have the state, we have the local government. All these three tiers of government, they have various means of what? Of generating revenue. They have sources of what? Revenue. And as a result, we need to have a better understanding of how each of these tiers of government are meant to generate their revenue. But on a general note, government as a whole, they are meant to generate revenue through the following means. We have taxation. Taxation is refers to the compulsory levy imposed by the government where or direct where no direct benefit is received by a citizen from the government. This levy, I will still come back to explain what I mean by that. This levy is usually payable at different rates depending on the nature of economic activities conducted by individual or firms. Now, what we are referring to here, we have what we call taxation. Taxation is one of the sources of government revenue. And what is tax? Tax is a compulsory levy imposed by the government on the citizen. Regardless of the activity or the job you are doing, you are meant to pay tax. It is only when Nigerian government review the tax system that I said that if your revenue does not fall up to, if you are a limited liability company and your revenue fall below 120 million, 125 million, you are not meant to pay tax. Prior to that time, no matter how your revenue look like, certain amount of money is meant to be paid. If you don't meet up with the normal tax standard of the nation, there is what we call minimum tax that you are meant to pay to the government. There is a way we calculate the minimum tax. Hello, Alisa. Can you speak?
Sir,
Yes, I can
this
hear you.
taxation, this taxation now for the
Yeah.
individual, have they revised it or I don't know.
Okay, as for the individual tax, that is personal
Mm.
income tax, that one has not been reviewed. They only look into the company income tax, looking at your position,
Eh,
and they also look into
oh,
VAT. Those ones has been properly looked into. But as
okay.
at present now, those reform tax reform has not been implemented due to the issue in the National Assembly among the three tiers of government and the governors and the what and the president. They are still agitating.
Okay.
It has not been implemented. As a result of that, they are still using the old tax law as at 2023, 2023 by Financial Act. The Finance Act of 2023, even though they suspended that, they are still using, because that was the period that they increased the VAT to 7.5. But the federal government have looked into it presently that they want to take it to 10%, from 10% to 12%. But it has not been implemented because there is a lot of agitation going on that. Because it is not in favor of some areas of the country, while some areas of the country, some regions are being favored with the new tax law. Now, and when we look at the tax system, there are various ways in which government is meant to collect tax from people. We have what we call progressive tax system, we have what we call regressive tax system, and we have what we call proportional tax system. All these tax system, when we talk of progressive, the higher your income, the higher the tax you are meant to pay to the government. When we talk of the regressive, that is the tax system that collects lower from the poor, I mean from the rich and more from the poor in terms of it's not the amount you are paying they are referring to, but in terms of the effect on on that particular person or on the organization. That's what we call regressive tax. Then the other one is what we call proportional tax. The proportional tax system is a tax system that collects the same rate of tax from the what? From the poor and the rich. Regardless of where or how you are making your money, you are paying the same rate. Not the same amount, but the same rate. These are the various tax systems. Then we have different types of taxes. We have different types of taxes and they have their effects. We have what we call direct tax and we have what we call indirect tax. When we talk of direct tax, that is the tax levied on the properties and individuals. Tax levied on individual and the company's what? Profits. These type of tax are what? What are the example of the tax we're referring to when it comes to direct tax? Direct tax, we say it is the tax that is levied on the income or profit of the organization or income of an individual. The person paying direct tax can ascertain the amount payable as tax and the burden of the tax cannot be shifted to the final consumers because you are paying it at the end of the period or at the end of the year to the government. After you have closed your book for the year, that is when you pay the government. Or after they paid you at the month end, you can't shift it. That one cannot be shifted to any of your stakeholders that are dealing business with you. That is what we refer to as directors. And that directors, what are the examples of directors? We have what we call company income tax. We have personal income tax. Based on the question asked by Aleza. Now, we have what we call company income tax. We have what we call personal income tax. We have what we call capital gain tax. Are you with me? We have what we call petroleum profit tax. We have what we call withholding tax. But that withholding tax is being categorized under the frank investment because that one is meant to be deducted at source. Now, all these taxes that I've made mention of, they have their way in which they are collecting it from the people. When we talk of company income tax, you are meant to pay 30% of your profit at the end of the year based on your financial report to the government. Government will also assess you to tax, but you can do personal assessment on that. When you compute that, you go and file your returns to the government. Apart from company income tax, we also pay what we call education tax. That was formerly 2%, but presently it's now what? 2.5% of the accessible profit. That is another form of tax. We also have what we call capital gain tax. If you dispose your property and you make profit out of it, you are meant to pay the government. That is the capital gain tax. When we talk of personal income tax, that is tax to be paid by an individual. And this is meant to be paid to the what? To the government due to which subject to what? Tax jurisdiction. State government is responsible for personal income tax, with the exception of the armed forces and police force, the foreign affairs, and those people resident of Abuja. They are meant to pay their own personal income tax to the federal government, while other states citizens are meant to pay to their state government, depending on their residence, where they are staying. That is on personal income tax. Then the next one is what we refer to as indirect tax. The indirect tax is the tax that is levied on goods. And the burden of such tax can be shifted, and the person paying the tax cannot ascertain amount payable as tax.
Yes, sir.
Can you all hear me? Okay. It's network issue. Just came back now. Okay, now back to where we are. We've discussed what is the revenue all about. We've discussed about the tax. We've made mention of what we mean by taxation, different types of taxes we have. We're talking about the different types of indirect direct tax. We've talked about the company income tax that you are meant to pay 30% of your profit at the end of the year. We've talked about the personal income tax also. Talk about the capital gain tax. But we're now talking of how to compute your personal income tax. That your personal income tax is on progressive tax system. Now, the other one is on what? 30% of the profit you realize. That one is what we call proportional, regardless of the company you are operating, regardless of the income you maximize. That one is on what? Proportional tax system. But when it comes to personal income tax, that one depends on what we call progressive tax system. Why is it progressive? The higher your income, the higher the tax you are meant to pay. How does it go? After your gross income, you will take out your considered relief. After deduction of the considered relief, we talked about the 1% or the 200,000, that one will also be deducted. If you have anything relating to pension you are paying, that one will also be deducted. If you have anything relating to insurance premium you are paying, you will deduct it before you will now come up with what we call tax income. That taxable income. That taxable income is what is subject to tax. And how do you go about it? We have what we call 300,000. That one is at what? 7%. The second 300,000, that one will be at 11%.
Mm.
The next 600,000, that one will be at 15%. The
15%.
next 300,000 again, the next 600,000 again, that one is at what rate? The next 500,000 is at what? 15%. The next another 500,000, that one will be at what rate?
19 ba?
19%. Then 1.6 million, that one will be at what?
21.
23. 21%,
23.
sorry, 21%.
21.
21. Then the anything above what? 3.2 million, that one will be at what? At 24%. That is for you to calculate the personal what? Income tax. Now, we also have what we call indirect tax. That indirect tax is the tax levied on goods and services. What this particular indirect tax cannot be what? The burden of that tax can be shifted depending on the nature of the goods. This is aspect of this one is economic aspect. When we say nature of goods, we are talking of whether the goods is elastic or inelastic. If it is an elastic goods, elastic products, the burden, if it is perfectly elastic, the burden of the tax cannot be shifted to the consumer. If it is perfectly what? Elastic. But if it is fairly inelastic, fairly elastic, the burden of the tax will be majorly borne by the producer, while little will be borne by the consumers. Part of it will be shifted to the consumer, but not in full. But if it is perfectly inelastic, the burden of the tax will be shifted to the final what? To the final consumer who will consume the goods. But if it is fairly inelastic, then the burden of the tax will be majorly borne by the final consumer, while the producer will bear little. That is why we call it depending on the nature of the goods that will determine whether the burden of the tax will be shifted or not being what? Will not be shifted. Take note. Question can come from this part, even though it doesn't form part of what, because it will tell you to look into the economic affairs of the nation. Question can be texted anyhow. Take notes. Now, on that note, we move to the next level. What are the examples of indirect taxes and their impact on the economy? Now, under the indirect tax, we have what we call tariff. That is import duty. We have export duty. We have excise duty. We have value-added tax. We have stamp duties. All these are examples of what? Indirect taxes. and their economic effects. Let's pick it one after the other. When we talk of import duty, that is the tax levied on imported products. The tax levied on imported products. When we talk of excise duty, that is the tax levied on export products. Then when we talk of export duty, that's the tax levied on what? Goods to be exported out of the country. Then when we talk of the excise duty, that is the tax imposed on local made goods. Local made goods. What are the economic implications of all this? When we look at it from these three I made mention of, they can be used as a means of generating revenue to the government. Government can use them as a means of generating revenue. Governments use what? Taxes, what do you call it? Indirect tax as a means of generating what? Revenue, including the what? Direct tax. They can use import duty as a means of controlling the pattern of consumption. Government can use what do you call it? The import duty as a means of regulating pattern of consumption. If they don't want the people to consume foreign products, they will increase more tax in order to encourage people to be consuming the local made goods. For them, in order for the infant industry to be able to meet up with their counterpart competition across the border. When we also look at it from another dimension, it serves as a means for government to regulate the economic affairs when using fiscal policy. Government use tax to regulate the total money in circulation or to regulate the economic activity of the nation. When they don't want you to consume import, that is what they are going to do. When they want to reduce or increase the money in circulation, they use what? Fiscal policy. Under that fiscal policy, the major instrument to be used here is taxation. They can increase the tax. They can increase tariff. They can increase what? Excise duty or reduce it, depending on what the government wants to achieve. It also serves as a means of generating revenue for government to provide social or infrastructural facilities to the society. Now, my question to the people in the class now, what's the difference between infrastructural facility and social amenities? Hello? Difference between the infrastructural facilities and social amenities. If you don't know it, let me know. We don't need to waste time. Difference between infrastructural facilities and social amenities. Question came out in 2014 on that what I asked you now. Difference between the two words. Difference between the infrastructural facility and social amenity, and they should give 4 or 3 examples each. That's what I'm asking you now. You can see such question in an exam. What is your opinion on that? Are they the same thing?
No.
Okay, what do you think? Can you say something about it if it is no?
Okay, infrastructure, me, I would say it's mostly not consumable, but when you talk about social amenities, it's something like pipe, warm water, something that people can benefit, like they can consume. I don't know.
Infrastructural facility, we also consume it now. We're the one using the road, using the Tom Milan Bridge. Abi? We're the one consuming electricity. Is that not so?
It is.
Now,
okay,
now,
I would say that.
I'm with you.
Okay, so I'm going to say that infrastructural facility, the major difference between infrastructural and social amenities is the fact that infrastructural is very capital in nature, right?
Okay.
So it's capital intensive. So it's a project that is supposed to span for a very long time. compared to the
Thank
social
you.
amenities. Examples of the
Okay.
social amenities, you have pipe-borne water, just like she rightly said,
Yeah.
schools and the likes. While infrastructural facilities, we have the dams, we have the
Yeah.
bridges. Majorly, that's what I'm going to say on that.
Okay. Thank you. I love this. But let me put you guys through very well because we don't know where the examiner can pick up their question from. When we talk of infrastructural facilities are public property put in place by the government in order to enhance the economic activities. Infrastructural facilities are public properties put in place by the government to enhance the economic activities, such as Kanji Dam, such as refinery being built by the government, not private owned, the one built by the government. Those ones that will enhance the economic activities. When we talk of the bridges, I'm not talking of pedestrian bridge, I'm talking of what? The major bridge built by the government in order to link one nation to another nation or a state to a state. Those ones, building of university in some areas where resources can be generated. Those one refers to as infrastructural facilities that will enhance the economic activities. But when we talk of social amenities, these are basic necessity of life. They are basic necessity of life. In terms of hospitals, we talk of normal road within the state. We talk of schools, pipe-borne water. Is that clear? The electricity. Electricity and power generation are not the same thing. But both are meant to what? They are meant to be used by the what? By the citizen. Can you see the difference between the two of them? Okay. We've been able to look into the tax and we've been able to look at what? Then another one is value-added tax. Value-added tax is the tax that is being introduced by the government in order to be able to increase their economic development in terms of capital project that will add value to the nation. That is why they call it value-added tax, which you are entitled to pay certain amount of money from the additional profit you have added to the cost of your sales to make it sellable at a selling price. You have added something to cost of sales to make it a sellable product. That amount you have added, government is also meant to collect certain amount of money on top. At present, is at what? 10% based on the new government. But before it was 7.5. Before 7.5, before the amendment in 2022-2023, it was at what? 5%. This is what we refer to as what? Value added tax. As a citizen, any goods you are buying, you are meant to pay certain tax to the federal government. Federal government is one responsible for the collection of what? Tax, value added tax. That value added tax will be shared by the what? Among the three tiers of government. On what basis? 15% to the federal, 50% to the state, 35% to the what? To the local government. When we get to where we're going to discuss this under here, we're going to discuss that. That is under that part. Then we move from that what? That to stamp duty. Stamp duty is another form of indirect tax that is imposed on what? On instruments and services. The service you are rendering, you are meant to pay what stamp. If you want to carry one product for another product, they will put what stamp there. That stamp you are meant to pay government 50 naira. Any service you are rendering in the bank that they transfer money from one place to another, government will collect 50 naira from that transfer, and they will also charge you what? VAT. Those are the means through which government can generate revenue through taxation. Any question on that part, please? Absent of no question, I move to the next level. Another one here is fees. The fees. These are payments made by the users of public services. Now, when government renders service to you, they will charge you some fee. We also have fines. These are penalties imposed by the government to the offenders or those who have breached the law. That's another means through government generate what? Revenue. We also have grants. Aids and grants. That is the support given by the government to another government or given by a particular government to another government. It could be at the state level, it could be at the federal level. Grants are meant to be given to people in order to sustain their financial situation, depending on the capacity of that particular what, nation, if such can be granted. This refers to non-payable money. It is not a loan. It is just mainly a way that government supports other governments by the government from another what, government with the aims of helping such government either to improve or to start a project which is of great importance to the society. Now, during the era of Buhari, there was a particular period that Buhari donated some cars, some vehicles to Niger State. Niger, Niger. A lot of agitation were coming from near and there, saying, why must he do that? We are suffering, this and that. But I think the best way they can give, if they cannot give them money, is to find a way to assist them based on their problem they are facing. While we are also meant to receive from other nations who are ready to support, depending on what the capital project you are dealing with. Aside that, we also have what we call government investment. We have government have investment at the local level, they also have at international level, and they are meant to realize, they are meant to make what? Interest on the investment. That investment is also served as what? Revenue to the government. We also have what we call public debt or borrowing. Government can borrow money to finance a particular project or the other to achieve their microeconomic objectives based on what? Public expenditure. What does the book say? It says, debt or borrowing becomes an important source of income to the government when revenue collected from tax and other sources are not adequate. Government can source for money by borrowing from other nations, from financial houses. We call it what? We have what we call internal and external what? Borrowings. Government can borrow money within the country, they can borrow money outside the country, either from IMF, from World Bank, from IDA, from Paris Club, from the London clubs. They are allowed, as far as they are member of that association, they will apply. And there is going to be debt what? Payment plan. If they don't have money now, they can reschedule it. We call it debt rescheduling. There is a way they can agitate and talk to that particular what organization that borrowed them money in a way to what? To reduce their debt liability in such a way that they can pay for them. If it is comes to what we call debt repudiation. When it comes to this, we are talking of what? A good finance minister who is capable of knowing what and what they can do to sustain the nation. Kudos to Ekonjo Iweala. When she was there, she really worked hard. It's not that Obasanjo paid what we call the Nigerian debt at that time. But Ekonjo Iweala worked things out as a member of World Bank to sort out that Nigeria is a developing nation. As a result of that, they help us to repudiate our debt at that particular point in time. It's not the useless set of Minister of Finance we have presently, that they don't even know the direction of the economy, talk less of what they can give to the government as a way of guidance or advice that will enable the economy to sustain. Nigeria's economic sustainability is at what? Zero level. Because these are not what? Enjoying anything. But also talk of sales of what? National assets. Government can sell what? Public property. If they notice that it is not needed anymore, they can sell it out. That was what happened to what? Nitel House in Ireland, that they disposed to themselves during that particular period. A lot of things happened in that process. Those are the what we refer to as what? National property. We are looking at it now. Maybe very soon they will also sell what? This national stadium in Surulere, because they are not doing anything there. The place is not what? Being renovated. They are not even thinking about it. These are various sources of what? Government revenue. Any question before we move to the next level? Any question before we move to the next level? Okay. Absent of no question, we also move down to what we call revenue collection agency in Nigeria. Who are the revenue collector? Who are the people that are agency collecting revenue on behalf of the government? We talk of what? NNPC. Presently, it has been privatized, but formerly it was purely under the federal government. But that privatization, the government still owns 51% of NNPC. That's the reason why NNPC cannot decide on what to do. The decision of that organization is in the hand of the federal government. Are we together? NNPC came into being on the 1st of April 1977 through the decree number 33, following the dissolution and merger of the Nigeria National Oil Corporation (NNOC), established by the decree of 18 in 1971, and the Federal Ministry of Petroleum. As at that time, they normally have a Ministry of Petroleum. When they now merge together, they named that organization NNPC to look into oil matter when Nigeria discovered oil in 70s. Oil was discovered in Nigeria in 70s, and that was what killed our economy, because formerly we were into agriculture and other resources that are being exported by the government. But immediately we discover oil in Nigeria, they throw away the other economic activity that can sustain the nation. That is why agriculture is not functioning in Nigeria anymore. When Tinubu came into power, he said he wanted to solve the agricultural problem. He wanted to create Ministry of Livestock. When we have Ministry of Agri, and Ministry of Livestock will now be working under which ministry? We don't know. That is showing that is this particular man have the sense of what he's talking about or not. The sensibility of most of our leaders are under under their palms. They don't have what to offer. And aside that, we also have what we call Federal Inland Revenue. That is the agency in charge of tax collection. That is the agency in terms of what? Tax collection through the Federal Inland Revenue Board. Federal Inland Revenue Service started as a part of the Colonial Tax Organization under the name of the Inland Revenue Department of Anglophone West Africa. That was before the colonialization. They have what we call inland revenue. When when we're still under United Kingdom at that particular point in time. Now, under this, we have the Nigeria, the Ghana, the Sierra Leone, and Gambia working under this administration. They are meant to pay their tax to that organization. But after the, what do we call it? After the independence, the whole thing changed, but the name still maintained Inland Revenue. But they now call it Federal Inland Revenue. While at the state level, they call it Internal Revenue. You can call it Lagos State Internal Revenue Service. It's different from Inland Revenue. Aside that, that is what I made mention of. We have State Board of Internal Revenue Service. That one is also meant for collection of what? They are meant to settle. That board is meant to settle the tax matter on personal income tax or company income tax among the what? Among the between the state and the federal. They will look into that and find solution to the problem on anything relating to what? Tax jurisdiction or tax matter. They are the one responsible for that. That one came into being in 1993. Aside that, we also have what we call Department of Petroleum, DPR. They are also there to work in line with the federal government to regulate both what? The offshore and the what? Inland of petroleum matters. Let's see what the book is saying. It said, at the onset, petroleum matter were handled by the hydrocarbon section of the Ministry of Lagos Affairs with the reported directly to the Governor General. The unit kept record on matters relating to the exploitation and importation of petroleum products. It is also enforced safety and other regulations on the matter, which were then mostly products importation and distribution. That was what they were doing before. But as the activity of the petroleum industry expanded, the unit was upgraded as Petroleum Division within the Ministry of Mining and Power. At that time, they were under Mining, Ministry of Mining and Power. The Petroleum Division grew to become the Department of Petroleum in 1970. In 1971, a new body, the Nigeria National Oil Corporation, came into being. Which the control of the Ministry of Mining and Power continued to exercise the statutory supervision of the control of the industry. In 1975, the whole scenario changed, where the ministry was upgraded. The ministry was upgraded, and at that level, they introduced what they call NNPC, Nigeria National Petroleum Corporation. That organization is now meant to look into the what? Anything relating to petroleum matter. Yes. Which is what being reviewed during the era of what? Buhari, that now privatized. They said they want a kind of, that the government is spending too much money on petroleum. But if they look into the matter vividly, that's okay, there is going to be efficiency and effectiveness when they commercialize what? The organization. That was what led to the commercial of that particular organization in 2022. When they launched it, they introduced it in 2020, but it's been launched in 2022 that, okay, this organization is now what? A private organization. But the 50% of that organization is in the hand of the federal government. They don't give them the total control. Then that now led to another organization called Nigerian Customs Service. That one is in charge of monitoring what? Collecting what? Tariff. Monitoring the goods that are meant to be moving out or moving into the country, and they're meant to collect what? Tax on those goods. Let's look at what the book is saying and their responsibility. There's a lot under here to learn. The Nigerian Customs Service, a paramilitary organization, has established since a little over a century ago under the British colonial administration, when Mr. T.A. Waugh was appointed in the year 1891 as the Director General of Custom for the collection of inland revenue in Nigeria Coastal Protectorate. This his appointment formalized the duty which the department had been performed under the Goya Niger Company. The Goya Niger Company has been in existence since 17th century, but came into this that they have what over control of this called what custom. But later they privatized them, they separated them. They are not under custom anymore. But the company has died as at now, because they're the one that turned to Niger borders. But later the company died. Now, the Nigerian Customs Service statutory function can be broadly classified into two. One, their core function, just two. One, collection of revenue, that is on imports, exports, and accounting for those ones. We also have prevention and suppression of what? Smuggling. Those are their duty. They don't want them to come and smuggling the goods into the nation. They act as what? Anti-dumping what? Military, paramilitary rather, because they don't want any product that are not meant to be used or banned or embargo. They don't want such product to be coming into the nation, even though it's not effective in Nigeria. I'm not going there. What are the other functions? Implementation of the government fiscal measures. In terms of fiscal policy, government always use what's custom to control the economy. They use them. Generation of statutory data for the plan and development of the nation. Governments collect what? Data from them in terms of the number of goods they've imported into the country, in terms of the number of goods exported out of the country. And I told you in the former class, maybe our first or second class, this time, that a nation as a whole needs to have a better understanding that when it comes to balance of payments, a nation must maintain what? Equality between the importation and exports. Investments and what? Savings must be the same. And government expenditure must equal to tax. Now, this aspect we're talking under the custom. Government can use the data gathered from the custom to know what is the population or the amount of goods that they've been imported into the country and what is the amount of goods they've also exported out of the country. They can look at it. If one is higher than the other, they will develop a policy that will encourage either export or import. But mostly, government always, there is what we call Export Promotion Act. The government will look at it or giving the organization tax holiday. These are part of the what? Fiscal policy instrument. Giving of tax holiday, try to encourage the what? The local industries to produce more. Try to reduce the tax. They will place embargo on any goods that are meant to affect the what? The local made ones. For the infantry industry to develop. These are the systems to be used by the government to regulate what? The economy. And they cannot do that alone. They will do that through what? Some of these agencies. One of the agencies here is what? Nigeria Customs Service, Nigeria Customs Authority. Aside that, trade facilitation, they facilitate trade among what? Nations. Implementation of bilateral and multilateral agreements among the nations. Bilateral means the agreement between the two nations. Multilateral among what? Many nations. Trade agreement, foreign trade agreement among the what? The nations. That is what we mean by what? If it is multiple, that is, there are more than two. If it is by, there are two. Collection of levies and charges. They can play penalty on those people that imported the goods that they don't want them to import, or they will seize the goods. They will now offer them for sales directly by them. They also work in line with the police, NDLA, SON, NAFDAC to make sure they achieve their aims and objectives, and CBN. These are responsibility of the government. Now, classification of government revenue. How do we classify the government revenue? These are the classes of what? Government revenue. We have what we call Ed 1, that is indirect tax. Ed 2, direct tax. Ed 3, mining. Ed 6, direct allocation from the federation account. Ed 7, we have direct tax, that is payee. Ed 8, license and land revenue. Ed 9, mining, that is solid mineral. Ed 10, we talk of fees. I've talked about that fees today. We talk of another Ed 11, we are talking of earnings and sales. That is the money that government earns from the investment or the service they render to the public by collecting the money from those investors. Renting of government properties. Government also rent government property out to people. Those that wanted to do party, they can rent them. They want to do crusade, they will go and rent the national stadium and other stadium from the government. They will pay. Interest and repayment, that's loan. Government can give out loan to a state, to a nation, that they will pay certain amount of interest on it. Then immediately they make that payment, then government is meant to collect the interest on that payment at the same time. That will be also accounted for. We also have interest on investment. Interest on what? On interest and what? This is the general, this one is what? Interest and repayment. That is for the states. We have reimbursement of those who are collected money from government that they meant to return. We have the armed forces. We have what we call miscellaneous. These are the classes of government revenue. Now, these revenue are meant to be accounted for in a particular account. What are the accounts they are meant to be accounted for? We have what we call the federation account, and we have what we call federal government account. We have the federation account, it has its own head and subhead. Then we have what we call the federal government account. What are the likely revenue? What is the federation account? What is the federal government account? Now, federation account is the pool of accounts where the revenue that are meant to be shared by the 3 tiers of government are being paid into after necessary deduction have been taken care of. Hello? Listen to me once again. We are still going to this definition at the front. Federation account is the pool of revenue. The pool of revenue. It is an account. It is the pool of revenue where the revenue that are meant to be shared by the 3 tiers of government are being paid into. It has its own format. We have the revenue. What are the revenue to be seen in the federation account? 1, we are going to see Ed 1. We will see what? Ed 2. And we will see mining. That mining they are referring to here, look at it. Ed 3, that mining they are referring to, they are talking of what? Petroleum. Revenue from crude oil. Any revenue generated crude oil, that is what we pass as mining under what? Ed 3. The Ed 1, Ed 2, and Ed 3 are meant to be paid to the federation account. After certain deduction has been taken care of, such as what? 4% of non-oil taxes, non-oil revenue. That 4% will be collected by the federal inland revenue. Federal inland revenue collection, that we call it what? Collection charges. For collecting those taxes on behalf of the government, they deduct what? 4% from the tax. That is 4% from that total revenue generated through them will be aside what? VAT. Because VAT has its own separate account. It's not meant to be paid to the federation account. There is another distribution of VAT when it comes to what? Federation account. Now, aside that, the direct tax, the indirect tax that will also appear here. We are talking of import duties. We are talking of what? Export duties. We are talking of excise duty. When it comes to what? When it comes to indirect tax, company income tax will be paid to that account. Company income tax will be paid to federation account. Capital gain tax will be paid to federation account. Petroleum profit tax will be paid to federation account. Sorry, petroleum profit tax will be paid to what? Federation account, but it will not appear under what? The revenue collected by the what do you call it? Federal Inland Revenue. It will not appear, but you will see the explanation as we are going. Why the 13% of revenue generated through oil will be paid, 13% will be deducted from the total revenue generated through crude oil, will now be paid to the oil producing states. They will distribute that 13%. They will deduct it from the federation account and pay it to the what? To those states that are oil producing states. Why the last part of it, the personal income tax? Personal income tax will not appear in the federation account. It's going to appear in the federal account. It's not meant to appear in the federation account, but will appear in the what? In the federal government account, which we refer to as consolidated revenue fund account. That is what we refer to as federation account. How does federation accounts look like? Do you know how to prepare it? Hello?
No, sir.
Now, this is the format. Let me quickly give you format for federation accounts. Now look at it, inflow. Under the inflow, we have indirect tax. Sorry. We have the indirect tax. And I think you know all those indirect taxes. Do you want me to specify them?
No need, sir.
We also have under this particular indirect tax, we have this. The next one is what? Direct tax. We have it here. We have mining. That mining, I'm specifying it for you here. The mining we are talking about here, we are talking of revenue. We are talking of the crude oil. Personal income tax will not appear here under the direct tax. Take note. Then we have your total. You now come here. We have collection charges. Collection charges. For that collection charges, if you are giving, you deduct it, such as 4%, F Inland Revenue Service, 4%, 4%, 4% on non-oil revenue. Non-oil revenue. We also have custom. Custom service. That one is 7%. Then oil derivation, 13%. All these will be added together. You will now less it. Total will be less from here. When we less the total, we call it what? Distributable what? Income. This is what will be distributed among the three tiers of government. We now say revenue allocation. We now have the federal. Where are we? We have the federal, we have the state, we have the state, we have the local government. Federal is meant to take from the federation account 52.68% of the revenue. State government is meant to take 26.72%. While the local government the federal government is meant to take, the local government is meant to take 20.6%. This is the distribution. Then they will now deduct it from here. This is how it looks like. Any question, please? Hello?
Hello.
Do you understand what I've done there? Is it
Yes,
clear?
sir. Yes, sir.
Okay. Now, the next one is
Oh,
federal government.
sorry, sir, please, can you explain it? My
What do you
network
say?
knocked me off. I said, can you explain what you did? I didn't get it. My network knocked me off. Sorry, sir, for
Which of
taking
the
you
one?
back.
Is it the format you want me to re-explain?
Is this one the format?
This is the format for federation accounts. If you want to prepare federation accounts, this is how federation accounts should look like. The inflow, what are the inflow? We have indirect tax, we have the direct tax, we have the mining. That is the crude oil. Money from what? Revenue from crude oil. Alisa, I'm coming. Let me finish this. I will attend to you. And when you add this together, the money you have, you are meant to deduct charges from there. After deduction of the charges, then the remaining money will be shared. That's distributable income will be shared among the what? The 3 tiers of government, where we have the federal, the state, the local government. Federal is meant to take 5.268%. State government is meant to take 26.72%. Local government is meant to take 20.6%. Any question? Alisa, you can talk now, please.
It's okay, sir, thank you.
So this format now is ICAN tested this one.
What do you say?
Is ICAN tested also this federation account?
Yes. Anytime I can want to use it as a control paper in public sector accounting, if question come from here, students always find it very difficult to go because there's a lot of
How much?
technicality. Hello?
How many marks?
Most of the time they want to test it is always compulsory question, 30 marks.
Wow. No. Okay, sir.
Then the second part of it is what? Federal government account. This account is also known as Consolidated Revenue Fund account. It is the account to be managed by the federal government where they pay the revenue and expenditure of the federal government account into, where they pay the revenue of the federal government and the expenditure of the federal government is meant to be paid to this account. And this account is meant to be handled by the Accountant General of the Federation. Federation account is also meant to be handled by the Accountant General of the Federation. This account, it is account where the revenue of the federal government is meant to be paid into, and the expenditure in terms of the salaries of statutory officers are meant to be paid from the Consolidated Revenue Fund account, which is referred to as federal government account. And all other revenue are meant to be paid here. What are the revenue to be seen in this account? One, we have what we call allocation from the what? From the federation account. That is statutory allocation from the federation account. They will pay that to the one that meant for federal, to pay to that account. We have payee of the federal armed forces, payee of the federal armed forces, payee of the police force, and other related forces under the federal government. Then payee of the resident of Abuja, payee of the resident of Abuja. We also have, are you all with me? We also have payee of the foreign affairs. Those expatriates, they pay their pay to the federal government. That is why we refer to as what? Foreign affairs. Those ones are meant to be paid to the what? To the Consolidated Revenue Fund account. Other revenue that I did not make mention of, such as what? Disposal of government property, repayment of loan, grants, aids, fines, penalties, all those ones are meant to be paid to the Consolidated Revenue Fund account as what? Inflow. Will I also give you the format? Do you want the format?
Please, sir.
Yes, sir.
Now, before we look into the revenue, we have what we call balance. At times you can have opening balance, and if you don't have, no problem. It's not compulsory. Balance brought forward. If the government did not spend the total money in the account finished, they will have balance brought forward. Then we have this year as the opening balance. We now have revenue. Now, what are the likely revenue to be recognized here? We have statutory allocation. On federation account. Mining of mineral resources. That's not crude oil, please. payee, payee of who and who? One, armed forces. Armed forces. We have police force. We have armed forces, police force. What else again?
Foreign affairs.
Residents. Residents of Abuja or Federal Capital Territory, FCT. We also have foreign affairs. We also have dividend. That is dividend on government investment. Dividend on government investment. Aside that, we also have disposal of government properties. VAT allocation. Loan repayment. When they pay federal government money from the loan they give to people, when they repay it, they pay it to this account. Then we add all this together. Put the total here. Then from here, we have expenditure. Under the expenditure, we have personnel emoluments. Of statutory officer. other recurrent expenditure. Loan repayment and services. Now, take note, there is what we call transfer. Transfer to development fund. I will discuss that one later. Development fund account. We also have transfer to contingency fund account. Then this the same transfer can appear here. Please take note. Under the revenue. Do you understand? You know, here we have what? Transfer to, it will not be transfer from. Now, this one will not be transferred from. When you transfer money from development fund, it's going to come to this account. Indirectly, that if they collected money from that account, they refund it back. This is how the consolidated revenue fund account also look like. They will deduct when they deduct this one from here, then we have what we call if they call it, if they don't use opening at the beginning, then you refer it as surplus. But if they use opening at the beginning, you call it what? Closing balance. Is that clear? Surplus or deficit. Which is the closing what? Balance carried down. This is how it look like. Any question? Any question?
How many marks?
The marks, depending on what the way they structure the exam, the way they structure the exam will determine the marks that will be attached. If it is comprehensive one, then minimum they can give to you based on the present situation now. The compulsory part of the public sector, which is question number 1, is always 30 marks. If that's what they wanted to use and they structure it the way it is, then we will make it to be 30 marks and they will make it more complex. But if you understand those principles I've made mention of, you will have no issue. Do you understand? Then this is where I'm going to continue my next class by the God's grace. Look at the Federation Account Act. The Federation Account was established by Section 162 of 1999 Constitution of the Federal Republic of Nigeria. The Federation Account is the one in which shall be paid all the revenue collected by the government of the Federation, except the proceeds from the payee of the what personnel of armed forces of the Federation, the Nigerian Police Force, the Foreign Service officers, and residents of Abuja. Can you hear that? I've made mention of that today. The Federation account is a distributable pool account from which the allocations are made to the federal, state, and local government. That's the format given to you there above. On such terms and in a manner described by the law, currently the figure in the pool is distributed using the revenue allocation formula over the years as shown below. Now, there's a lot of adjustment that has been done over years, but the present one that we are using now, is 52.68, 26.72, and 20.6%. That is the one we are using presently. Other one has been what? According to the Revenue Mobilization Commission, those one have been 35. That is the one we're using, amended as 2004. They've not adjusted it. Now, look at the revenue formula. Look at it. Revenue allocation formula. 13% of the revenue derived from oil source goes to the state. I've given you that format there above there, from which it is obtained in consonance with the principles of derivation. For 7% and 4% of the gross revenue in the federal inland revenue allocation to the federation, in the federation account are allocated to the custom service and federal inland revenue service separately. The rates now, the one being given to the state, the rates stated above are the first line charge, that is 13%. Source is adjusted, deducted in the oil sector revenue received from the total oil proceeds. The addition of 7, and this is what they call 11% of all the revenue received, are taken out of the non-oil collection. Whatever the remaining in the federation account will be distributed, pool is shared between the 3 tiers of government. Then state is also meant the allocation to the 36 states is distributed the net of the adjustment in the earlier 3 notes, that one I gave you above. Now, the local governments, we have 774 local governments, and we have the 36 states. They are also meant to distribute the revenue to them using the revenue formula. This revenue formula is based on equity basis population basis, revenue efforts, and development. But that one has been reversed due to the present situation. They are using 40% on equity. They are now using 30% on population. They are now using they are now using 20% on land mass, and 10% on IGR. That is what they are using. But formerly, they were using this. All these are being what? The means through which we can generate what? Those who are that make up what? Federal Account Allocation Committee. These are the body responsible for that. And their responsibility are also given in terms of their function. The members of the Federation Account Allocation Committee, we have the Honorable Minister, which is going to be the chairman. We have the Commissioner of Finance of all the states. We have the Accountant General of the Federation. We have the State Accountant General. We have representative of the 13 organizations mentioned above. This organization, look at them. Those who are member representative. We have the representative from NNPC, representative for Federal Inland Revenue, representative from the Nigerian Customs Service, Department of the Petroleum. We have the Revenue Mobilization Allocation and Fiscal Commission. We have the Federal Ministry of Finance, representatives come there. We also have CBN, representatives come from CBN. We have the National Planning Commission. We also have Office of the State and Local Government Affairs. We also have Office of the Vice President. A representative must come there. We have the Directorate of the Ministry Pension. We have the Office of the Head of Service of the Federation, Head of Service. Then we have what? Department of Civil Service Pension. All these are members in that what? Mobilization Committee, Revenue Mobilization Committee, and their function are also stated clearly under here, which you can see. We have made mention of state joint what? Local government. We talked about them, and their responsibility are also what? Stated clearly. Are we together? Now, you can take your time to go through this and their considered charges. I'm still going to discuss part of this part, the headings and the other things you are meant to see in those accounts before we start solving questions. But this is past 9. Do you understand? And I'm going to start from in our next class, I'm starting from the State Joint Local Government Committee. Their responsibility is to settle the matter among the what? Federal and the state, and also to distribute the revenue that are meant to the state and local government to them accordingly. Their members, we have the Permanent Secretary for Local Government Affairs. We have all the chairman of the local government are also meant to be part of it. We have the representative of the Accountant General Office of the state, and we also have the federal pay offices. All these ones, they are parts of what? Then we have what we call the Federation account, which I've discussed. We have the Ed 1, this one is 0. We have the Ed 1, the Ed 2, and the Ed 3. They now said the Ed 3, look at that Ed 3, what they made mention of. These are oil pipeline license, rent of mining rights, mining fees, royalties, and any money earned on crude oil and gas, flared gas, all those ones. Those are the ones that are meant to see under the Ed 3. They are stated clearly. On indirect, not direct. Direct tax. This one is direct tax. So, make a mistake here. I've adjusted it. When you are reading it, you can see it clearly. This one is what? Head 1. This one is head 2. Any other question, please? We'll discuss federal government account. The federal government account or quasi revenue fund account. This is the account established by Section 80 of the Constitution of the Federal Republic of Nigeria, 1999, except those revenue itemized items which are specially designed to other funds. All other shall be paid into the quasi revenue fund. They gave us, look at it. We have statutory allocation, which is at 6. We have what? At 7, which is tax of pay of the armed forces, of the police force. Now, they now said this includes the pay of the federal armed forces, police force, those people resident in Abuja, stated clearly, license, internal revenue, all those ones are meant to be paid into this account. Then, at 9, which is mining, another mining came here. That mining is referred to as mineral resources. Mineral resources aside what? Petroleum. All other resources will be paid to the federal account, not federation account. It's only the corridor that will pay to the federation account. Then we have any from the what? Sales of investment or this and that. We have the rent of government properties. We have the investment, all those ones. All these are meant to be paid to that account. Then what are the charges to be paid from this account? We have all recurrent expenditure, which I stated. The salary of what? Statutory officers, such as what? Police Service Commission. Are you together? Police Service Commission. We have Public Compliance Commission. Those officers there, they are meant to pay their money from there. Public Service Commission, Nigeria Law Reform Commission, Independent National Electoral Commission, Auditor General for the Federation, President and Judicial and Justice of the Federal Court of Appeal, Chief Justice of the Federal High Court, Chief Justice of the Supreme Court. The pension and gratuity is also meant to be paid from that account before we now look into the VAT. That VAT account, I've explained what VAT meant for you. It is presently 7.5%. Then the present government has adjusted it to 10%, but it has not been implemented due to the agitation going on. Then we also have it. There's another, I called something for you before, development fund account. Development fund account is the account established by the federal government in order to take care of the capital project. It is the account that is meant for monitoring the expenditure of capital projects. Now, this capital project is talking in terms of what? Those projects that are meant to be carried out by the federal government in terms of infrastructural facilities, social amenities. Those are the ones they refer to as what? Capital projects. And what are the content of this development fund accounts? The same thing you have at your income side is what you are going to have at your payment side. That is your debit and credit side are the same, but they are different. Now, look at it. When we talk of the inflow on this part, we are going to see the opening balance where necessary. Transfer from consolidated revenue fund account is going to appear there. You will see the grant, A's and grants is also there. Do you understand? If there is gift given to the government, it's going to come to this account. That is, it's a donation given to the government, is coming to this account. Apart from that, where we have loan receipts is meant to come to this account, either internally or externally. The same thing we have made mention will also appear at the debit side. Let's see what they call the content here. See, contribution from the Considered Revenue Fund. These are yearly transfer from this. Then external grants is also meant to be there. We have what we call external loan is meant to be there. Internal loan is meant to be there. All these are the words. Now look at the charges also. In terms of the charges, your capital project, you pay it out. You have the administrative charges where there is a maintenance, all this and that. They put it there. Then external financial obligation, that is when we talk of what? Giving loan to the other neighboring countries. That is what they refer to that. Or grant to other neighboring what countries. It's meant to what? To go to that account. The last but not the least on this part is contingency fund account. This is the account put in place by the government in order to take care of unforeseen circumstances or a situation that cannot be postponed. Any situation such as what? This Ebola issue, they also made mention of what we call the COVID-19. Those situations, they will go to the what we call the contingency fund account to take out the money there in order to take care of those issues. Now let's see what the book is saying. They said Constitution and Section 83 of 1999 Constitution, the fund is set up to meet unforeseen expenditure, urgent situation occasioned by natural disaster. The fund derive in its income from the consolidated revenue. That's the only source of income. They will transfer money from consolidated revenue fund account to this account to take care of anything that happened at that particular period of time. Now, the charges will arise on contingency ground in exceptional cases where environment is not what possible. Because where there is environment, we cannot use what contingency fund. And where an application for additional provision revealed that the issue of the fund cannot be delayed, cannot delay it, that is when you can make money from this account without causing serious injury to the public interest. That is when you can use money from contingency fund account. This needs, the need cannot wait until supplementary appropriation act is passed. They can't wait till that time. Then the money will come out from this particular account. Now, in our next class, we will look into the question part. But do you have any question you want to ask me first and foremost before I call it a day? Any question?